Welcome back again. It has been a moment. This is the Captain Gal FX. Welcome to our YouTube channel. It has been so long. Now we are back, and we are back with a good lessons to help you improve your trading journey. As you know, the way we do it. This is the Captain Gal FX. You know me very well. And again, we are now back to business, and again, we are back to give you the best mentorship you can ever get from anywhere, from any place. Now today we are back with another video. As you know, we are always having a lot of bangers, and again today we want to take you through a topic known as liquidity, because liquidity is one of the greatest concept towards trading that a lot of people use to trade this given financial market. Now, I want to take you through examples of liquidity which you can find in forex market, examples of liquidity and how they are traded. Example of liquidity and how they are traded. Now, the first liquidity I want to take you through this video, we have three examples of liquidity. We have equal lows and equalized liquidity, equal lows and uh, equal highs liquidity. The second liquidity we call it trendline liquidity. Remember, I told you that a trend line can also act as a support or as a demand, as a support or as a resistance or as a demand or as a supply, depending on where it is used. And again, the greatest example of liquidity we call inducement liquidity. Inducement liquidity. Now we have three examples of liquidity. We have equal lows and equal highs liquidity. We have trendline liquidity. We have inducement liquidity. This liquidity is very key to your trading journey. As somebody who is always trading in balances in the market, those are for the people who are using smart money. And remember, I'm both a smart money trader and also a pure price action trader. And I all use, sometimes I even use liquidity concept to do analysis basically on my charts, and that is not a problem, and that is not an issue. Now, what is equal highs liquidity? That is basically what we are going to talk about in this given video. Today's video, we are going to start with equal highs and equal lows liquidity. Equal highs and equal lows liquidity. Now, what are equal? Remember, I told you very well, for those people who are in my mentorship, and again, for those people who have been mentoring for quite a while, I told you that the market will always move on a zigzag, giving us what we call pullbacks on the same, which means, let me say we have an uptrending market. The market will always be forming what we call higher highs and higher lows, higher highs, higher lows, higher highs, and gives us some good pullbacks to get what we call tradable opportunities available for that particular market. Now, sometimes we'll always find that the market will always not create the market will not always create those tradable opportunity. Basically, you'll find that there is a market which will always move on a consolidation. Let me say there is lack of volume in the market, or there is lack of the mere liquidity. And I told you liquidity basically means where money lies, or liquidity is equal to money, and liquidity is what drives the market. Sometimes we'll always find that the market will always move on a zigzag. The market is hitting the same place multiple times. When you see the market hitting the same place multiple times, basically what this market is doing is that the market is forming what we call equal highs and equal lows liquidity. Let me say the market is hitting the same point at a supply. Let me say you have created some good supply around this given zone, and the market is ever hitting that supply. Let me say it has hit it the first time the second time, the third time, and possibly if you know the way we trade smart, the pure price action, we always say that if a zone is tested once, twice, and the third one, there's a possibility that that zone might be broken or the fourth time of retest, which means basically the market might come here and again break that zone to sweep that zone so that can give us that sell. Now, when you're having equal highs liquidity, this is what you do, because a lot of people will fall for, let me say, will fall for sell or opportunities around this given zone, because the market will detect that there is a lot of orders or there is a lot of money which is lying at this given point of interest. Now, for you to trade this market, if you are for you to trade that market, identify above this equal highs liquidity, the market might be having what we call any imbalance. Now, what you expect in that given market, expect the market to push. Your entry point should be a sweep of that equal highs so that the market can tap any imbalance above so that it can give us that given nice sell. Now, anytime you see a market creating what we call equal highs liquidity or equal lows liquidity, basically what you need to check is your entry point should remain a sweep of that given equal highs liquidity. That one should be your main entry point, because when the market sweeps this equal highs liquidity, the market will get what we call tradable volume, which means all those retail traders which their money were lying around this given zone, because when the market is giving us equal highs liquidity, there's a lot of concentration of orders which will be lying around this given zone. A lot of people will be creating what we call orders of sell. There will be a lot of sell orders at these given points of interest, which means when the market detects that there's a lot of sell orders from this given place, the market will always come and sweep it so that it can give us that nice entry for sell. This is basically what we call the concept of equal highs liquidity. And if you see equal highs liquidity, basically do not enter at that point of interest. Basically, you are going to become what we call a liquidity. Make sure that whenever you spot an equal highs liquidity in the market, basically there is a high chances unless there is an economic calendar or economic data which is going to be released, there's high chances that you are going to become a liquidity in that given point of interest or in that given market, which means for you need to avoid as much as possible trading at that given zone and leave or wait patiently for the market to break that given wait for the market to break that given to sweep those given liquidity so that you can enter. Mostly, you will always find that when equal highs liquidity are created, there might be some point of interest above this given zone. Let me say you might find there's a fair value gap, you might find there's a bearish order block zone, you might find there's a supply which is above that given zone, which the market should be tapping, which means when the market or sweeps that equal highs liquidity, the market basically gonna tap that given supply or demand so that it can give us that nice sell to come and sweep all the ranging or the trend line liquidity which has been created below this given zone so that it can give us that nice rally on the same. Now, what about the equal lows liquidity? Basically, equal lows liquidity are always created at a given demand. You might find the market doing something like this. When you see the market doing something like this, which means we lack enough volume or enough money in that given market, there is no a concentration of money which is required or liquidity to move that to push that market higher and higher. Basically, what you need to do when you see the market hitting the same demand for the longest time possible, there's a possibility that you are going to become a liquidity on that event. So now, as my advice as a trader, you are always advised that you avoid trading at that given demand zone and wait for the liquidity to sweep so that you can enter and the market to give you what we call a clear direction on where the market need to do. The market knows, the market makers knows very well that a lot of forex retail traders, they do not have patience to wait for the market to do what the market is required to do. Now, basically, they will enter very, very early. When they get any supply, they don't know whether this supply has hit how many times. They will just wait for this market to tap this given supply. This given demand. Sorry for that. When this market taps this demand, they know very well that a lot of forex retail traders, they will take their trades from this given point of interest. Then they will pump a lot of money. Some will even go full margin. Once the market detects that there is a lot of buy orders at this given zone, it will come and stop everybody away so that the real traders remains in the game, and basically the market will flow within no minute to tap their TP. One example of equal highs liquidity I saw around was yesterday when I was in class with my students. There's a trade on a USD. There's a trade on a USD card, which we analyzed with my students. Now, equal highs liquidity can be something like this. You can see this, which means the market has been tapping this zone for the first time, the second time, and the third time. Now, a lot of people entered sales at this given zone, and again the market is now coming to just to sweep them away, to sap this supply so that it can give us that nice sell. Now, if you have seen this market, a lot of people took sell orders here, sell orders here, sell orders here, and the market makers knows very well that there's a lot of liquidity lying around this given zone. You can see there's a lot of liquidity lying around this given zone. Now, the reason why I analyzed this market and gave my community or my students these buys, although we analyzed it using pure price action, but again we used what we call liquidity concept to sweep all this liquidity, equal highs liquidity, which is pending above this given zone, so that this main supply, which is on basically 45 minutes or even on 1 hour, if you check it around, you'll always find that this market will pump to clear all those liquidities above that zone to give us a nice buy of 78 pips. This is named as a liquidity zone, and basically you will find that this market has been lying on the same zone. This is called equal highs liquidity. You can see it. Equal highs liquidity. Immediately the market will always come and sweep that given zone. It's gonna give us some good, nice buys, nice sells when it taps that given supply, which means this is a liquidity zone, which as a good forex trader, you should take note of this, because this is now a liquidity zone, which means we need this market to push higher than this so that it can give us a very, very good tap of that given supply after the sweep of this liquidity, so that we can rally down for that given nice sell. That is basically what I expect in this given market. Guys, thank you very much for this. And again, the next time or the next video we are going to release, we are going to talk about the trendline liquidity, and this is something that a lot of people have experienced and they don't know how to trade it. Basically, we'll be talking about what we call trendline liquidity, and again we'll also be talking about inducement liquidity. And inducement liquidity also even help us in this given USD card. So it helps us during entry position, because during this entry we used what we call equal highs liquidity to enter this given, not equal highs basically, but inducement liquidity to enter this given entry point. And this is something, guys, and equal lows liquidity was here. You can see basically this one also was a equal lows liquidity at this given zone. The market came and swept that equal lows liquidity. Let me show you. This one was equal lows liquidity. Around this given zone, the market has been forming equal lows liquidity, and a lot of sell buy orders were placed here under this zone basically, and another one was placed at this given zone, which means we had what we call equal lows liquidity. And immediately that equal lows liquidity was swept, we got what we call a very, very good rally for buys, and that is some concept you can use even to do what to trade a particular market even in the future. This is basically a very good concept. Liquidity is one of the best concept you can use for trading. Guys, kindly join our Telegram community. The link I will pin on the comment section. And again, use the link which is on the comment section again to register a trading account with the best broker. And I told you that a broker can also be a determinant or a deterrent to your trading journey or to your profitability journey. Make sure you use the best broker with good leveraging and again with the good tight spread. This is a broker with good conversion rate. I will pin the link on below. Kindly create account with that broker. And again, I'm gonna give you my WhatsApp number, which I will pin on the comment section below, so that you can always WhatsApp us on that WhatsApp number, so that I can be always. You can join our mentorship, which is only at $20. And again, for now, because it is on a promo, and you can also join our Forex mentorship, basically Forex VIP Signal community. You can always join our VIP Signal community for only $15. For only $15. You can always join our VIP Signal community for only $15. And again, you can DM us for copy trading, and we do copy trading with the broker which has been pinned below. Just go and create account with that broker, DM us on the WhatsApp number, which is going to be pinned on the below comment section, so that you can always join us for both the VIP signal, and again, you can join us for copy trading and also for mentorship. Thank you guys, and see you in the next video. Bye bye. This is the Captain Gala FX, your #1 online mentor. Bye bye, and see you next time.